Spanish bond yields are up slightly this morning on reports that the ECB is encouraging that losses should be forced on Spanish bank bond holders. China's premier said over the weekend that the government will step up its efforts to boost its economy. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. On Friday, we saw stocks bounce 1.7% thanks to a great earnings report out of JP Morgan after 6 down days. Does this mean it's time to get into the market, or should we take profits?
You know, always after the fact, it always looks a little bit easier. You know, you look at this trend line, you look at this chart that we've been following. You know, each time we've tested every end of this range, whether it was on the upside when people were looking for a breakout, it didn't happen, or on the downside when people were looking for a breakdown, it didn't happen. So right now, after you get the spot you should have like switched some gears and maneuvered, it makes it a bit more difficult. If you look at a chart here of the SPX, you'll see what I'm talking about. Ever since we put this low in, you know, back in late May after that head and shoulders top pattern, we followed a pretty, I would say, constant pattern here. First move you had was right from the lows. Remember, we built this inverted head and shoulders pattern. We came up to this end of the range and then failed. Came back into support, made a higher low. Then we went from support back to resistance. Everyone started getting bullish again. All of a sudden, we had that 6 down days coming into the spot on Thursday. Where were we? Another higher low. Your low, higher low, another higher low. And if you look what happened on Thursday, it wasn't a drastic outside day. It wasn't a day that people like, wow, look at that outside day. It was powerful. But it was enough to push through, get some people out of their longs if they didn't get out well, and then, come back above it. So that was a signal also to cover some shorts, at least half, not press, because pressing in this tape this whole summer has not worked. And then Friday had a good earnings report. It ignited a move, and now we're smack back in the middle of the range. Now the question is, do we go to the top end of the range, or for the first time, do we stall halfway through it and then potentially turn lower? So I think that's what we're watching for as our earnings season really gets underway.
Yeah, that chart looks pretty resilient, actually, considering that China's indices are at a 3-year low, and we have all that negative news out of Europe every day.
Well, right now in China, I think there's an opportunity in China. Okay, if you look at the chart of FXC right now, I know it's confirmed that they're having a hard landing. It's at the lows here. You go to your weekly chart just to show you how all countries are not created equal. If you remember when we had our low back here, this was the first exchange to make a major move and lead the markets. I think actually even happens right around here. But now look where we are. We're right at this big lower level. We're right coming into this 120. So from 150 down to 120 at this point, if you have a long-term thesis, I think if you're in your 20s or your 30s, you got to buy a little FXC. I would do it the 3-tier program, maybe tier 1 around here, and then if things get really drastic over the next 3 to 6 months, we'll go to tier 2, tier 3. But at this point, if you have no actually, this is the FXC, I'm sorry. I did this last week also, didn't I? Oh,
must be me.
That must be you. That's a euro. That's FXI. Damn, what's the matter with you, Red Dog? Anyway, it's coming into a bigger support here, a bigger trend line. I think that coming into this, I would say 30 area, you're better off trying to potentially buy into this area, versus sell it. And this is, though for those that want a little bit of risk to China that haven't been caught in this range, so I would go there. But back to the, SPX, which are our indice, look where we are. We have a low, higher low, higher low, higher low. I know that, we're not at all-time highs yet, but, overall hanging in there pretty well. So I would say, at this particular point, you have to be very impressed if you're, a bull or on the constructive nature of this market.
Well, in the sector spotlight, we're going to talk about the financials because that's what led Friday's rally. JP Morgan and Wells Fargo had great reports. They kind of gave bullish momentum to this sector. We saw the XLF bounce off their lows. So what are you seeing there?
I'm seeing a group that was battered and bruised having a spirited move off the lows, not just a dead cat bounce. This feels a little bit more than just a dead cat bounce. And now that the news on JP Morgan's out of the way, you saw some decent earnings or good earnings from Wells Fargo. You look at the chart of the XLF, you will see, yes, I do have the right ETF up here. Here is that low. higher low, reclaim the moving averages. It definitely has some big resistance to contend with as it approaches this prior peak here of about 1485 or 15. But overall, it's developing a new trend. So as long as it stays above this trend, I think that people will try and buy the dips in some of these financials.
Well, the real highlight on Friday was JP Morgan's earnings. The fundamentals were pretty strong there, and then we got a lot of clarity on that trading loss. Stephanie Link at Action Alerts Plus owns this stock, but just like Jamie Dimon, she likes it a little closer to tangible book value, which is $34.50.
$34.50.
Yeah.
Okay, you might have another area or opportunity to buy that again down there. But I think what's important is that they came out with their earnings on Friday. Jamie Dimon did what he always does, and he reassured everyone. And I actually thought that the expectations were really high, and I wasn't sure if he'd be able to pull it off, but he did. And the street was waiting for some kind of news after 6 down days to jump into something. You look at the chart now, and it's going to be interesting for I know my traders are going to watch to see if they can get a trade into this earnings gap. I don't think it happens in the next few sessions, but you have your low. This is when we were on and we talked about how they bought the news. Here was your commitment to that low. Came up to resistance, couldn't power through. Now that the earnings are out of the way and it's above the moving averages, I would say the longer it stays above 35 and change and goes sideways, the more traders are going to be like foaming at the mouth waiting for some type of trade into this 36, 80, 37 area, because there are a lot of people short against this level here. So at some particular point, it will be a good trade into this news gap. It's just a question of when, and I think it's going to take a little bit more time.
Wells Fargo did well on the housing recovery, actually. The mortgage business was up 90% from last year. Refis were up 43% from last quarter. But the stock is coming up against some recent pivot highs. Are they going to be able to break through that level?
I think this will be the first major bank to make new highs, out of like the Wells Fargo, out of the Bank of America, out of the JP Morgan, out of those guys, out of Citigroup, obviously. And it just shows you that, using relative strength works for macro investments. Things that you want to stay with longer term. You want to make sure they stay above key moving averages. You want to make sure that you keep checking the technical temperature. And Wells Fargo has been passing with flying colors this entire time. No bad news centering around that one. If you look at the longer term chart here, Wells Fargo, you will see ever since it cleared just this descending trend line way back when, it's acted very well. Here it wasn't ready to make new highs, but we were not that type of market. You had a descending channel that failed. What did it do? It tested support, tested the 200-day, and now look at it, all the way back up to this major resistance area. So if you're an investor in Wells Fargo, different story here. You haven't had as much pain as any of these other ones. And now if you go closer here, wide range bar, earnings out of the way, it's above the moving averages. Next major resistance here is going to be 34.59, which it's only 60 cents away.
SunTrust is another way you can play the housing recovery. It's a regional bank that should benefit from an improvement in the mortgages that we've heard from JP Morgan and Wells Fargo. This is a stock that Stephanie Link owns, but she did take some profits in it last week. They report earnings on Friday. So what are the levels we're watching going into Friday?
Well, there are two different ways to approach it. Like Wells Fargo and JP Morgan, those earnings are out of the way. You don't have that kind of risk right there. With this one, I like the chart. The chart's saying it's under accumulation and looks really good. They still have to deliver their report. And hopefully there's no surprises here, because the chart right now is pricing in a good report. As you look at it, you'll see that it's above all the moving averages. It's held major support. It's not even close to the 200-day like some of the other stocks that have been pressured. You're coming into a key resistance area right here. This 25 is definitely going to be big. If you look at the weekly chart here, it's been acting very well. It's well off the lows. And once it clears, just say this, what is this, around 25? Your next real level on resistance-wise, is almost closer to 30. So I do think at some point this stock will be, I could say, testing this moving average. I don't know if it's going to be after this report, but at some point I would say before the end of the year, you could still get $30 here.
Bank of America reports on Wednesday. It's been a steadier stock more recently. It's still up 40% for the year, though, but it's making higher highs and higher lows. So what are the levels that this can get to?
Well, this one's it's a slower moving slug, so to speak. At times it gets exciting, and I've traded it a few times this year when there's a tradable pattern. I do think for Bank of America, if you want something that, a lot of people like cheaper stocks that they could buy a lot more as a retail investor. I don't think this is a great trading vehicle for traders, but as an investor, you want some exposure to banks. I think a lot of people in Merrill Lynch are starting to feel happy about their jobs. I have some friends there, and they're saying that things aren't as bad as everyone says it is over there. Anyway, you haven't heard them in the news in a while. If we do get a housing recovery, they do have a lot of exposure there, which they've already started to see. So if you look here at the chart, just to show you how it does move and you can time these things, remember coming into this year, this was something that I was long and I tried to stay with, and this was a major move above this descending channel here, and it was great. Then you had even a continuation pattern. I remember this like it was yesterday. Above this 825, we were trying to load into this thing for what was a move to almost 10 bucks. And then, it went sideways, consolidated. Market wasn't sure if it could continue, and it failed. Ever since then, hasn't really acted that well. I guess you could say, just like, the market itself, it has a small little, trend that it's following right now. Last time it made a higher low is right around the 750. So I would say the street's not expecting a huge, awesome report from them, but as long as it's in line, I think this stock steadies itself. And you buy the dips here because buying breakouts is hard to find or hard to get success with. And here's your major resistance now. You have like a small little double top right around this 821. That is 821, 822. That's the next big resistance here for this stock.
Okay, well, we're going to take a quick commercial break and we'll be back with the second half.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to take a look at some of the stocks that are reporting earnings in the near term here. We'll kick it off with Apple. They report next week, but they're been able to hold above the 605 level. That's where they closed on Friday, but it's probably going to be a little choppy going into that earnings report. So what are you doing here?
At this point, it's not like it's cheap or it got beaten up and you're like, oh, I'm going to pick up some Apple. And also, it's to pick up a stock going into earnings, there's risk there, even though it's Apple. And I do think that as an investor, you could buy Apple, stay with Apple, and own it longer term. It should make new highs in the year. I think 750 is definitely doable. I think Piper came out today and said 920. But for me, as a tactical trader, you can make money long and short. And that's what I try and focus on. And you have to know your time frame. But if you look here at Apple, I actually gave you a nice move. If you remember, this was the EU Summit Day. Traded, it broke this small little descending channel. This is when it came back in play and started to act much better again. Obviously this was when it broke above the 100-day when we had that with Kramer. We said it was a buy around 545, and so far, so far so good. Anyway, last real pivot to buy above was 590. Okay, when it crossed this trend line. So, we also say don't chase situations. You always get another chance to buy back, because once it went above 590, it went as high as 620. Oh, what a coinky dink. Look at this resistance here, right around the 620, and that's where it pulled in. And then people say, why do you like trading Apple so much, Red Dog? Because these things happen and it follows rules, right? It failed here at resistance, came back. Oh my goodness, what did it do? It retested this breakout area, so that was where you could rebuy some back around 590, 592. So now with that said, on a micro level, you do have this small little pivot right here. Okay, you have 607.20, and then you have 607.66. If it gets above this, tactically, I think you can make another cash flow trade. Just the question is, what do they do going into earnings? Because Apple's done a lot of different ways. Does it hover, below these highs, which would be good, or does it make a run into new highs before earnings, and then you have to have a really, did I say really?
Yeah,
10 reallys to sustain a new high to new moves. And Apple's been known to always be conservative on their guidance. So the question is, how do they approach this earnings call? I think people are starting to get a little saying already that if iPhones, our numbers are a little bit weak, no big deal because iPhone 5 is coming out. So either way, I think it's setting up for something very bullish, and that's the way Apple's been acting the past few weeks.
Google's been a weaker stock. But they're trading below some of their key trading averages. They report earnings on Thursday. I think a lot of people there are going to look for what they're doing with mobile and social, especially given their Motorola Mobility acquisition in May. Could earnings be something that boosts this laggard?
Well, hopefully people are saying things don't come in threes, because the last two earnings reports were not taken well by the street, and rightly so. We came into this year with very big expectations for Google. It was it was my high beta tech stock pick of the year besides Apple. And ever since then, it hasn't really acted well. If you look here, the rationale in the beginning of the year was the tight channel, same way like Walmart had a decade-long channel. This on the weekly chart, if you look at it, or a monthly chart, hasn't been doing anything up here since the high it put in back here. And what year was that? I think it was in 2007. It has not made a new high, and it expanded its business from search into so many other areas. So anyway, with that being said, I think they're going to do everything they possibly can to have a good report, because right now, if they have another bad report, you see this level right here going across, you see 555, this is going to give way, and you're going to have a stock trading at 480 in a New York minute. So I think so many people are starting to get so negative on Google. You know what that means? That
Time
means
to get in.
It could surprise you. And I think a year ago I had a really good option plan on it. So for me, what I'm probably going to do is I'm probably going to take some in the money calls, just because I'm sticking with the call for Google. I'm not going in there with stock, because anything can happen. So at least if you go with the calls, risk is premium paid. So once you buy an option, especially into earnings, you have to write that off and say, I'm okay with that going absolutely worthless. But if you have a thesis and you want to take a little less risk, I do think that expectations for this one are really low. So usually when everyone is one way, I like to go the other way.
Not a bad strategy. Why don't we take a look at Coke? They're going to report earnings tomorrow. Earlier last week, they reported a 2-for-1 stock split. On this one, I think people are going to want to know how their ventures overseas are doing, especially as consumers here in the U.S., bring down consumption.
This stock's been acting very well. If you own Coke for the last 5 years, geez, I don't think you sell it here. As an intermediate trader, maybe there's some risk, the whole multinational theme, but if you look at the chart here, it's been acting very well. It's not even near the 200-day. It's been riding all the moving averages. Take a closer look here. It also just had a pull-in, so it's not at the dead highs heading into an earnings report, so it just pulled back. So I think that if you've been holding this one, stay with it. If you don't take stocks into earnings, I would say stay away from it, because again, you never know.
Why don't we do some quick hits? We'll start with Netflix. July 5th, they got that big boost on an increase in their streaming business, that report that was out. Can this one go higher? It's been holding above that level, the July 5th level, but can it go higher?
70.50, that day it happened. We tweeted, Sperling was all over him, like above 70.50, it could get squeezed. It not only got squeezed, it had an awesome move. You look right here. Big move from 70.50 all the way up into the 80s. Now it's trying to hold again, hold higher above this 80. Question is, can it get into this gap right around here? There's going to be some big resistance. I'm long a little bit, trying to stay with it. If it starts to get above 86.65, perhaps I'll add to it for a quick move to the 90s, and then we'll see if it can get into this gap before earnings or how it trades that.
Amazon was up on Friday after 5 down days, but it's still down 4% for this month. So what are you thinking here?
I think they have a lot to prove also. They finally mustered up a good quarter after everyone wrote them off for dead. And, same like a Google thesis. Overall, it's still holding the last quarter's gap. It's been just a micro trade. The last micro trade we had on this was when it broke this ascending channel. So right here, this was your short. This was the last little, trade here. And now what did it do? It came down and tested this support, still above the 200-day. Here's the gap. On Amazon, it's still holding it. It's still very big, so it's still showing you pent-up bullish momentum, but it's going to have to deliver on earnings, okay? I don't know anyone really in my little world that has the Kindle. Some do, but some don't. A lot of people do it on the iPad now. Right. I haven't seen any of the I don't know. I personally think that a lot of people could do what Amazon does. All the major retailers, you can go to Target online, Walmart online, you can go anywhere. You don't have to just go through Amazon. So to me, with that high PE, it's a little bit more dangerous, and it's just a trade. I'm not going in there with longs or shorts.
Facebook's been a little more disappointing in the last couple days, but it's still above $30 or $30.50. I think you've been trading this one, so what do we do here? What's your strategy?
My strategy is I still have some long. Okay, there are two different ways to approach it. There's a lot of concern about their earnings coming out, and rightly so. A lot of people don't know if they're going to be able to monetize mobile, and people think that their valuation was too high, which it was on IPO day. Obviously, 42, 45 way too high, 38 too high. But we've had a decent rounding pattern off the lows. So if you look here at the chart, recently, ever since they came out and all the underwriters pretty much came in with lukewarm concerns or lukewarm estimates. For people, even though 40-42 is a nice percentage game, in the olden days people would be saying 60, 70, 80, which I'm glad we're not in those olden days anymore. So anyway, I will use this as my stop. I'm not going to use 30.55. I'm going to use 30.25. If it breaks 30.25, I'm going to get out of my Facebook for now. Yes, I do trade and things change, and try and see if I could rebuy it back right around here. Because the two other tactical approaches we had besides on Mad Money, it was the red dog reversal right here at 25. Once it came back above the low here of 25.75, nice trade. And then we tweeted it all out when it started breaking this little trend line here at 28.10. Got long a lot, and now I'm staying with it as this stays intact. If this doesn't stay intact, you could probably buy it cheaper. If you're a macro investor, okay, meaning what's a macro investor, Red Dog? That's someone who wants to be with something for multi-years. Don't sell it at 30.25. Sit with it, 28.10. If it does get there, we'll reevaluate the landscape there. And I do think if you sell it here, chances are you're not going to get back into it, but only being tier 1. Nothing more than a tier 1 until it proves it can come out with a few good quarters of really good earnings. You could be in tier 2 or 3, but that's only intraday. I wouldn't take that overnight.
Well, there you have it. We're out of time. This is levels in the S&P we're looking at, the sectors we're looking at, and some specific stocks that Scott is trading. Be sure to check in at the end of the day for the daily recap with Scott and the team. I'm tongue-tied today.
You are. I feel like this will be a long weekend. I was riding my bike in the Hamptons doing 100 miles. I almost got thrown off the road by Jason Kidd as he was drinking a beer while I was driving. Crazy, these people. Anyway, with all that said, have a great week. It's the summer. Don't be so serious about it. Just take some trades, put some days together, and there will be easier, less choppy times as we head into the fall.